Hello everyone, welcome to my YouTube channel. This is Luis here, and we are back live on this day. Today we had the CPI, and on that we kind of like have some mixed feelings. And let's take a look right now on my plays, how we did it, and let's see if I did it right or not. So let's take a look over here, because I closed some plays and I let open some other ones, and I reopen some other ones. Okay, let's wait this one. All right. So we're looking at right now at Boeing. Closed it early in the morning. I could wait a little bit longer, but I didn't wait, so I closed earlier. So let's go back on my saved. This was up $140 and $139, something like that. But I think I closed in the morning. I did some profit. I closed this put for 140. And I closed the call at $4. Sorry. So as you can see, I made a $29 profit. Close the trade and the closing bell. So this one, I knew it that 5% on the pre-market would not be the one to hold on a bull position, and I kind of figured that out if that anything wrong with the inflation, it would be like a bad news, and I was right. So not right for my position, and also because probably like IV crash, and not much of the crash, but because the price, it went up first close to 49 in the pre-market, and then it started to drop, but it didn't drop enough to go to 43. And unfortunately at this point I have to wait if it continues drop by tomorrow and Friday to get to my 43 put. It has to be below 43. I think break even 43.25, and below that it's when I start to make money. So far I'm holding this position until Friday. It could be down 100%. I really, at this point, I have to wait. So it's open. Let's go back to see my trades. So BlackRock, this bull call spread, it's up today, $750, still down 50%, $10. I don't even know if I'd be able to close, because if you take a look on the share, it's 783. I don't know why it's so high, but I did display when the stock was right here, 850. So that's when I kind of like did it, sign it for display. That's my assignment. It was 850. So I thought we were gonna be in the bull market still, and it would have make this, but looks like doesn't look like too good for that. Okay, so follow up. So I got the Delta holding 84% loss. Disney, I think it's gonna be my profit, $46 I might play because I'm still holding one call. This gonna be going to dust. Hood, I don't know. I think I still have this open. I don't know if I try to close. Not yet. Actually, it showed to me $2, and the price is, wow, it's going up right now, 18.33. So let's wait. Right now it's at $2. Tesla put. Tesla put. Do I have it here? Yeah. It's show me $3. So down 94%. Another mistake. Actually, the Tesla was like so this JP Morgan play, what I did, well, this is I closed both. Actually this one I closed. So right now, if I was I closed like in the middle of the day. If I was holding this one, it would be down 82%. So let me see how much I close. I think I closed better than that. I close and see Taiwan. Yeah, 152 call. I closed with $34. 34. And this put, I closed for $7. So I lost 75%, $120. Stupid. I had a chance to close pretty good on my put and pretty good on my call. I didn't do it. All right. So this I still hold. This I still hold. This I still hold. JP Morgan. Okay, JP Morgan Chase. JP Morgan Chase. JP Morgan Chase. This one did it good. Okay. Put spread. I think let's see. Okay. So this put spread, I close at 128. Close trade. So the sell, I close. Well, right now it's 127, so I'll leave it that way. But the sell, 25 put, 445. Let me put this way. I think this would be 445, and this one would be 317. Yeah, so I made $28 profit, so I closed this trade. Okay, this one, what I did was I have to go in here, open the trade, because I purchased this sell call. It's about almost 6 minutes to closing. Let's see if I can do this quickly. You Order to buy one contract 205. Yeah, so I bought this one. Bought to close by 96. So I made a $90, I believe. So I still have this open, and I add put. Sorry, guys. It's my 185 put for $92. That's what I have. That's the play now. Let's save, overwrite. All right. So my account, save trades. So on the JP Morgan, I'm up $7.50. And I think I had another play that I did. 5 minutes to close. Okay, let's see. All right, it was SPY. It was a day trade. It's build. I did a long call. I'm sorry. That was a put. SPY for tomorrow. Switch to put 507. I did this one. See if I can be fast enough. $50. Okay, I roll over. So I got this for 50. So I want you guys. Alibaba shakes off. I have a buy on Alibaba. 3 minutes. Let's go to the closing bell. And then update a little bit after the closing bell.
Optimism around Alibaba's story, and part of that has to do with Jack Ma, still one of the most recognizable Chinese business leaders ever. And remember that the CEO, Daniel Zhang, stepped down, so Alibaba coming in at just the right moment, Jack Ma coming in at just the right moment could be positive, but I will say we haven't heard a whole lot yet, so this could be premature.
Okay, Dee, appreciate that, Deirdre Bosa. Now to Diana Olick on what's happening in the home builders today. Ground zero of sorts for this move higher in rates and this, inflation print this morning.
Yeah, you said it, Scott. The average rate on the 30-year fix jumped nearly 1/4 percentage rate point following this morning's hotter than expected CPI. We are now at the highest level since the end of November. The home builders, of course, are taking it on the chin. The home construction ETF ITB falling below its 50-day moving average, down over 3% on the day, but still up about 6% year to date and a whopping 57% year over year. It includes not just home builders, but home remodeling names like Lowe's, Home Depot, and Sherwin-Williams. And, of course, mortgage names like Rocket and United Wholesale Mortgage. Rocket down over 10% on the day. And let's not forget the REITs, of course, having a particularly rough day across all sectors. Boston Properties, Avalon Bay, and Digital Realty, just to name a few. REITs are particularly rate sensitive, giving commercial real estate financing and, of course, potential deal making or not deal making, Scott, given these rates.
Diana, thank you. Diana Olick following that story for us today. Mike, I'll come back to you. Got less than 90 seconds to go. So the market's going to be patient, right? It's going to have to be more patient than it thought. And the question is, for how long can that last?
Yes. Well, we're going to get a little bit of a clue. Honestly, we keep pointing to the PPI number tomorrow. I think there is a sense in there that the market recognizes the narrative can shift, at least in subtle ways, in less than 24 hours. If you start to draw the lines to the PCE inflation number, and also keep in mind how the Fed might want to talk around exactly what's going on. So I do think that we are going to have to be more patient. The consumer cyclicals are telling you that this is not without hazards, that the idea that the economy can just kind of plug along effortlessly, as far as the eye can see, with either rates going up or inflation still impinging on some people's spending power. I think we have to keep that in mind too. It's not a foregone conclusion. So you don't really sound any loud alarms. But you have to recognize that it's just not as free and clear as we thought it might be in the ideal case 6 weeks ago.
Well, we shall see. We're going to go out red, obviously, today, but it certainly looks like we're going to be off the worst levels where we traded most of the day. Dow will hover around 400 or so, a decline there. I'll see you tomorrow. I'll send it into OC now with Brian Sullivan.
And that is the scorecard on Wall Street, but the action just getting started. Welcome to Closing Bell Overtime, everybody. I am Brian Sullivan. John is off. Morgan will join us with some cool space stuff shortly. Stocks down. You saw that. A lot of red on the screen as inflation goes back up. A lot of red hot inflation data bringing in the sellers, though I will say we are going to end well off the lows of the day. That is a bright spot. But the big question, the trillion-dollar question, does that hot inflation print mean some or all of the expected Fed rate cuts are now off the table? We're going to ask Renaissance Macro's Neil Dunham ahead. But we begin with the markets and your money. Joining us now to kick it off, Ed Yardeni from Yardeni Research and Barbara Duran from BD8 Capital Partners. Big day, Ed and Barbara. Thanks for joining us. Barbara, your take on the inflation print, the Fed, and the markets.
Well, the inflation print, I think, surprised everybody and disappointed us. I mean, we were hoping January, February had some seasonal or anomalous explanation. This just says, the inflation, we've had a great decline from 8% in 22 to through this 3.5% print in the headline CPI, and it looks like it's stalled out for now. I think, all day long you're looking at the numbers and saying you can argue that inflation is still coming down. Other things are up. You've got to worry about oil prices. But basically, I don't think what it changes is the expectation of the timing and number of rate cuts, which had been in the beginning of the year probably 6 to 7 cuts, and then through the first quarter came down to 2 or 3, and the market still went up. So I think the market right now is really focusing on earnings, and we've had a little bit of downtime here because the earnings season for first quarter doesn't start until this Friday with the big banks, and I think that's going to be very important. I think the estimates on the street range about 9 to 10% in S&P 500 earnings for the year. And I think company guidance on both their sales and their margins is going to be very important to really sort of counter the uncertainty, which is going to be there for a while. Now people are going to be waiting for the PCE number, which the Fed looks at. So it's a time of added uncertainty, but I think there are buying opportunities that have happened today.
Yeah, that's the thing, Ed. I heard Josh Brown in the previous hour. He said it's a risk on, risk off, rate cut on, rate cut off market. What if that PCE, right, if it comes in a little cooler, does that then change the inflation narrative? Or as that narrative, the last couple of months, has that narrative been reset?
I'm glad you asked, because that's kind of where I was about to go, thinking that the personal consumption expenditure deflator, which is the consumer price inflation rate that gets more weight in terms of monetary policy making, may very well be more like 0.3 rather than 0.4. I know we're talking about minute little changes here, but as Barbara said, we did have a disappointment in March following disappointments in January and February. The PCED inflation rate gives a little less weight to hospital inflation, which got somewhat hot in March. The other thing that's really weird in the CPI is the health insurance component, and it rose very sharply after declining very sharply. It's a very volatile series, and it has no relationship whatsoever.
Okay, they explained CPI, PPI, whatever, and so that's what I did. Let me take a look here on my account on the SPY. I roll over, but I don't know if I'm gonna be able to roll over here. But what I did, I purchased also. I got this one for the 11, and I sold about 50, and I sold for 64 to buy. First of all, I got this one also. I added here, buy a call, and I got a 523 call. Then I purchased for $38. Okay. So I bought this for 50 and I sold for 54, and I purchased a put 501 put. Let me see how much I purchased just one. Bear with me. For 66. $66. Okay. Let's see. Let's go this one. And the whole over was profit. $2. Actually, gotta redo this because I did this with 68, and I got this for 66. The realized gain, it's $18 profit. The unrealized loss is still $24. Take a look here. Yeah, pretty much it. But this is right now on a pause market. Started to move because SPY started going down more. So right now I got 39 in the call and 42 in the put. So let's see how it goes. Let's save this trade. Let's put inflation. Save. And what else? Let's take a look on JP Morgan. Yeah, now I have this on JP Morgan. Had the 185 put and a 202.50 call. That's my new play. Tesla, UVIX. This I got a 3 position. And what I did, because I still believe this is gonna be pump, I opened a new position on UVIX. UVXY. $7 call. And I purchased for $29. let's save and let's make this as inflation. Save. It's for the Thursday, but tomorrow we have this split. So see how it goes. Okay, let's go back there. Save. This BlackRock is a call, is a bull call, so this go nowhere. See how it goes. How they're gonna close this on Friday. Also, they have their earnings, so I don't know how it's gonna be. This Delta, I don't know. 46.22.25. That's with the closing. Double check on the chart. See how it goes. Disney. Oops. What do I have here? A big support at 513 and SPY at this moment, but they're probably gonna go down. This didn't close, so this I'm up $7, and this I could have like changed this, because what happened was after I made money, I think I made money on a call position, I should have changed the put or buy the put, because I knew this is gonna go down, and from 69 and now 61. So that's the update, guys. My calls on UVXY, it's pretty bad at this point. $41. Tesla $50. But make some money, lose some money. I mean, didn't lose yet because it's still open the 19th, still for the next week. So see how it goes. Let's go back on the only mistake that I did was at Boeing. I could have come to home in the middle of the afternoon and look at the chart. It went down to 172. I had the 175 put. It would have paid me $300. I would have made $200 profit, and I didn't cash as much as I could, but that's okay. That's the name of the game. So let's see what they're talking about NVIDIA.
AI chips from Google, while Morgan Stanley raising their price target on NVIDIA to 1,000. NVIDIA ending the day up just under 2%. All right, let's talk about today's action. It was all about inflation, right? It was all about the Fed. Inflation running hot again. And now some, or maybe all, of the expected rate cuts may be delayed or even off the table. Let's talk about it all with Neil Dutta of Renaissance Macro Research. Neil, good to have you on. 01234. What's your take on rate cuts this year?
I still think the Fed's cutting rates this year. I think they probably start in July as opposed to June. So in that respect, I think all today's unfortunate inflation report does is push the Fed off by a month. Ultimately, we had 3 really bad months of underlying inflation to start the year. We're gonna need that many to kind of undo the damage, right? So I think that means the earliest the Fed can go is July, and I think 2 is probably a reasonable baseline, for the year.
Well, to quote the poet philosopher Forrest Gump, I'm not a smart man, but here's my thing, Neil, which is, why are we even talking about rate cuts when inflation is reaccelerating? Inflation is going up, not down in the medium term. Yes, it's down from 21 and 22. Why are we even talking about rate cuts?
Well, ultimately, I think it's taking the totality of the data, Brian. The Fed doesn't want to overstay its welcome with rates either. And so I think that's important to keep in the back of your mind. At the end of the day, the unemployment rate is up a little bit from where it was last year. And core inflation has declined. You put that into a standard kind of policy rule type of equation, and it would suggest that the rates should come down. Not a lot, Not right away, but they should come down. And I think that's just important to keep in mind. Now,
but is there, Neil? Okay, I hear your points, and again, we'll get this PCE number. Maybe it'll be cool. And then suddenly we'll be talking about once again how many rate cuts there's going to be. If there's going to be a day where I don't talk about the Federal Reserve, I might just retire. It'd be the best day of my life. That said, if we get your rate cuts, let's say it happens, could that then reaccelerate the economy and add to the inflationary forces?
Well, that's always a possibility. But again, I mean, the Fed ultimately, Brian, it all comes down to the trajectory of inflation. If inflation continues to come in bad, like it did today, then the Fed won't be cutting at all this year. But at that point, you probably have to worry about what inflation is doing to consumption and what that in turn will do for corporate earnings. I mean, that's a separate discussion. But ultimately, the inflation dynamics are going to dictate the timing of the Fed's moves. And so, I think if inflation improves between now and the summer, then the Fed will cut, as they should. If it doesn't, then they won't. So I do think that that's just important to keep in mind. I mean, there's the Fed's not cutting right now, as you mentioned, the inflation data are bad. But no, I don't think rate cuts in July are going to reaccelerate inflation right away. I mean, there's still a pipeline of disinflation across a number of key areas, in the CPI and PCE data that are still in front of us. So I don't think the relationship is as linear as you're making it out to be.
Okay, fair enough. That's why you're here, to correct me when I say. That's why I'm sitting on this side of the desk, Neil. But let me ask you, outside of inflation, on a serious tone, we know there's been a lot of talk about Iran and Israel, potential retaliation, Middle East reheating up. Obviously, some of that, Russia, Ukraine, goes into the inflation story. But there's got to be, in Neil Dutta's mind, this geopolitical risk premia somewhere, does there not? Outside of U.S. inflation and U.S. used car prices.
Well, absolutely. I mean, Brian, I think the biggest risk to the economy always are when there's some kind of supply shock that drives up prices, and simultaneously you have a hawked up Fed. This is why the biggest recession, fear period in recent memory was in the middle of 2022, right? I mean, because you had the Russian invasion of Ukraine driving up food and energy costs, and you also had the Fed going 75 basis points a meeting at that time. So yeah, it's certainly something that people need to be cognizant of. If you continue to see rising oil prices, that's going to translate into weaker disposable income, and it may push up household inflation expectations, which would then in turn keep the Fed from easing policy, which the markets continue to expect. All else equal, that would represent a tightening of financial market conditions and weigh ultimately on economic growth.
Yeah. Do you think the Fed is looking at that? I mean, they've got to have it in the back of their mind. They're all smart people. I know they're watching it personally, but do you think these are things, and we can read the minutes and find out, I guess, but do you think these are things that they've just got to keep kind of plugged in the back of their mind?
Well, I don't think the Fed's forecasting these things, but I think
they got to have it like, if this, then that.
They have to react to events as they're unfolding. I mean, that is absolutely true. So, these geopolitical concerns, I mean, you have to kind of take these things as they come to you. And, in my mind, I think it kind of, you have to weigh the risk of higher inflation expectations, but also you have to weigh that against the fact that it would pinch disposable income. So in some respects, the higher oil price may push up prices for oil, but it could push down prices for a whole host of other areas because people would be cutting back their spending in those areas.
Neil Dutta, Renaissance Macro. Great, smart discussion as always, Neil. Thank you very much.
Thank you, Brian.
All right, you're welcome. We got a news alert right now out of the pharmaceutical space. Contessa Brewer is here with that.
It's good to see you there, Brian. So it's official. Alpine Immune Sciences is being acquired at $65 a share for a total of $4.9 billion by Vertex Pharmaceuticals. The trading on Alpine, it has been halted now, but it ended the day higher by 20% because it had been floated that it might be the target for acquisition here. And yeah, it's official now. Vertex is buying it. They want it for the potential to benefit patients who have autoimmune diseases of the kidney. And they say it fits very well with the portfolio. So right now you've got Vertex Pharma down in the after hours trading, but again, Alpine ended the day higher by $20, and they think that this deal will close later this quarter at $65 a share.
All right, watching both those names, particularly Alpine, Contessa. We'll see in a few minutes, by the way, back on shows such as this one. Contessa, thank you.
Okay.
All right, up next, an EV sales surge. Sort of. Well, some car companies are struggling with EVs. It looks like there's at least one traditional automaker who's bucking that trend. The name and what it might say about the broader space. Next.
All right, so let's take a look at here why I closed my positions a little bit earlier. By the way, this Home Depot has that situation over there, which is look like on the weekly chart formation of cup handle, which is very bullish. Even so, the price is going down big time, forming the three white shoulders. I think three black shoulders actually. So big red candle here, 6%, and this week another 2%. But let's take a look at Boeing. So Boeing had this bar over here at, well, 173 I think was the top of the bar in the weekly chart. In the day chart we didn't have nothing. I can't remember which one. Anyway, I was seeing this pretty much as a like support and probably like bounce back. That's what it did, but it hit like now the resistance at 174. So Boeing dropped close to 2.5% today, but then kind of like bounced back a little bit towards the end. I don't know if this is gonna be a dead cat bounce. Well, you're gonna be sustained and a push on the upside. I don't think so, because we're very bearish at this moment. Why are we bearish? We're bearish because this situation, they chart sell. Should be good here weekly. And 4 hours, pretty much hitting the support at this point. Down 1%. We're probably gonna go more. Next support maybe until down here 4800, pretty much I would say. This is like the bad. If you break this support here in the 51.64, we're gonna go down big time. Alright guys, update on my plays. So I still hold BlackRock, I still hold Delta, I still hold Disney, I still hold Hood, JP Morgan. I redid it, closed one trade, I redid the second one, I did like a strangle. Play still hold, $40 too long. I don't think this is gonna get close to 40. PVH has a little bounce because a lot of call positions on that to 140, back again, probably 110 at this point, 109. Unless tomorrow we have a bloodbath and I got a chance to drop to close to $90. SPY, if the blood continues, the 5-1 put is gonna pay, because this is for Monday. I still have 2 more days, tomorrow and Friday, and probably gonna be close. It's more likely to be close to the 500 to be close to the 5200. I mean 520s. Tesla, if this drop to closer to 500s, I might visit 160 again, which is like support. 71 kind of hold firm. And UVIX is split tomorrow. Let's see how much this is gonna be. The $7 long call, am I gonna be the $30? I think $35 call. Let's see how it goes. All right, guys, thanks for watch. 40 minutes, and see you next time.